Our top focus on WION at this hour. Many economies around the world have beaten COVID-19 blues, charting a path of growth. But China's economy is still weighed down by the strict implementation of COVID-19 rules in the country. Reports say that the growing financial distress in regions across China is now raising the risk of local governments defaulting on bond payments. Many of China's local level governments have been struggling with tight fiscal budgets for years now. These strict COVID-19 lockdowns have limited the economic expansion and revenue has fallen for many local governments further. And this has further disturbed their fiscal mathematics. The local land sale revenues have fallen significantly in provinces, and experts now predict that the local Chinese authorities will now need to cut back on spending on the public services. All this is being done in order to keep a healthy balance sheet and avoid large deficits. The biggest stress local governments face is from the revenue loss in the property sector. Now, between 2021 and 2025, roughly 3 trillion yuan or $415 billion worth of bonds sold by the local government financing vehicles will mature annually. And the repayment pressure has become increasingly significant in the country. The delay in the interest payment has raised risks of a possible bond default in the listed market. Now, some parts of China have already started charging people to stay in centralized quarantine facilities. These were previously funded entirely by the government. Beijing has pushed local governments to borrow at record rates to construct infrastructure projects, all in a bid to boost the local economies and thereby the national economy as well. There have also been reports of disruptions to public transport services in provinces such as Henan, Hunan and Guangdong due to the financial troubles, and these problems reflect growing challenges that are being faced by some local governments in the country. China's growth has been slowing, and the world's second largest economy is not expected to meet its annual GDP target of around 5.5% in the current year. And for more on this, we are now being joined by Simon Lee, who is the co-director at the International Business and Chinese Enterprise Program from Hong Kong. Welcome to the broadcast.
Hello.
Right. Now, my first question to you is that in the absence of any major revenue sources in China, till how far can the local government stretch their finances, especially at a time when they're already facing a default on their bond payments?
Now, I think the challenge may only last for additional a few weeks. Why I say so? Because in mid-October there will be a grand communist party held in Beijing. After that, I think the situation will be more clear, and the central government, I think, will help the provincial government to solve the problem. So for the time being, we see the very worst situation that they cannot have sufficient money to implement the quarantine measure, and some of the bonds may have defaults, but they can delay the payment of the principal or interest. So it has been worsening for quite a number of months, and the investors are well informed of that, waiting. So I think in the coming few weeks, the situation will be better.
Right, and also considering how the Chinese economy is interlinked with the other economies in the world, how concerned should other countries be at this point of time?
Now, stability is of paramount importance for Chinese government, Chinese economy. So even the GDP cannot reach the target of originally 5.5%. It's still okay. Then maybe we start a new chapter after the conclusion of the Communist Party and next year. I think the central government is well prepared for that. We still have very strong domestic consumption, so I'm not too pessimistic on all this.
And can the central government actually help the local governments in China right now? And if they can, then in what possible way?
Now, we still have the biggest surplus in the world. The central government can always use the surplus to solve some of the local problems, but the central government, they need to solve so many issues, countrywide issues such as education, aging population. So they would rather let local government solve it, handle it, It's depends on the wisdom of the local government. I know there's some local government they face very harsh measure. They ask the local citizen to pay some of the quarantine expense, and they need to close some of the bank's account, and then they default on everything. But I think those are very short-term measures. So we see that even we see such worse situation, it's may only affect the country-wise economic performance a little bit. And everyone is prepared for that. We see a weakened renminbi also reflects such problems.
Right. Thank you, Mr. Lee, for joining us on Beyond at this hour and
Welcome.
getting us up to speed on this. Thanks very much.